Hi traders, welcome to Monetize. I'm going to record the weekly forecast video for the week starting on 22nd of August. Let's begin with dollar index. I'm clearing up the chart and starting with the monthly time frame. As per the monthly time frame, starting from the highest level to the lowest, I've marked the Fib retracement levels, and I'm also marking from the second highest to the lowest. So based on the monthly and the Fib retracement levels, dollar index remains bullish. As per the MACD, we don't see any signs of slowing down. So the histogram is still rising, and even the MACD lines are still pointing to the upside. So the next level as per the Fib retracement is 110.14. So to round off, we can say around 110. Moving to the weekly. On the weekly, a few days ago, we got this continuing divergence, which means a slowdown. I'm just saying slowdown because of the continuing divergence, not because of the regular divergence. So in case we have a regular divergence, then we have a deeper pullback, but in case of a continuing divergence, we have a shallow pullback. And the MACD lines, they were still making higher highs. So that's the reason I was not expecting a full reversal, but a slowdown or a pullback. So let's turn it into a line chart, and based on the line chart, I'm going to mark the levels. So in order to turn bearish, we required a break below 104.53, and it never broke below this level. In fact, it pulled back, made a retest of the level, and bounced upwards. Turning to daily now. On the daily, the MACD has turned bullish again with a bullish cross to the upside. So everything is hinting towards the next higher level. And the next higher level, as per the Fib retracement, is 110. Currently, the dollar index is around 108.10. So we still have a good room to the upside. And if we mark the Fib extension from this cycle, from this low, it's better. Let's use another color here. Yeah. So again, the Fib extension 0.618 is hinting towards 109.49. To round off, we can say 109.5. So definitely the next upward target for dollar index is 109.5 to 110. Now last week, we got an announcement from one of the Federal Reserve member that they are still aggressively looking at increasing the interest rate. So the next upcoming interest rate decision in September, we are expecting another interest rate hike from US Federal Reserve. So fundamentally, dollar remains strong, and even technically, dollar remains bullish. Now the next instrument which I'm going to cover is Nifty. Starting from the weekly, it made an impressive bounce to the upside, and now this is the area, this is the base from where it bounced impressively, and we also had a bullish divergence around this area. Again, The bullish divergence is on MACD histogram and continuing divergence. It's not a regular type of divergence. So continuing divergence means short time reversal but not a permanent reversal. So that's the reason we've got a bullish bounce to the upside based on the bullish divergence, and it has reached an important trend line resistance area. So we have marked the falling trend line. It has broken above the falling trend line, but it seems to be a false breakout because now we have got a red histogram, which means the sentiment has turned bearish again, and even the market, the Nifty has closed below the falling trend line area. So everything hints to the false breakout to the upside of this falling trend line. Marking the fib retracement from the recent swing low to the recent highest point, swing high. The 50% retracement is around 16,612, which is again coinciding with the previous high, the structure area. Let's move to 4 hourly. Turning into line chart, marking the recent most trend line. And we got higher high formation on the price, whereas lower high formation on MACD. So a clear case of bearish divergence. After the bearish divergence, it is expected to go downwards, and it happened, and the move happened to the downside. Now after the break of this recent most uptrend line, we can expect a pullback to retest the previous critical area and then continuation to the downside. Let's mark the important area based on 4 hourly line chart. The structure level is here. Let's use the horizontal ray tool so that we get the level also. It's 1700-872. So we can expect a pullback towards 1700-872 or 1700. Let's also mark the fib retracement. So fib retracement 61.8 is also around 17,883. So the plan remains to sell on the rise. Any pullback towards 17,839, 17,883 till 17,946 should be taken as an opportunity to sell. And because dollar index is gaining bullish momentum, so usually when dollar gains, the stock indices, they turn lower. Okay, the next instrument which I'm going to explain is USDCAD. As usual, starting from the monthly time frame. Based on the monthly, the cycle to the upside is I'm marking the 5-leg upward cycle starting from the lowest, 3, 4 and 5. So this is the 5-leg upward cycle which completed with a double top. Sorry, this is the double top with a bearish divergence, followed by the downward movement. Now it seems that it's consolidating on the monthly time frame in a sideways direction. So usually after a steep bullish move, either we get a downward correction or we get a sideways correction. So based on the given scenario, it seems it's going for a sideways correction, and I'm going to mark the important levels, turning it into a line chart, and yeah, that's enough, I think. And we still have bullish scenario as per the MACD, because the MACD lines are rising higher and even the MACD histogram is rising higher. Going to weekly now. As per the weekly, we got the lowest point, then a higher low, and again double bottom scenario here, followed by the higher low. So we have a series of higher lows with a series of higher highs. High, higher high, higher high. So everything remains bullish on the weekly as well. I'm trying to turn it into a line chart, clearing the okay, no need to clear, I'm just okay. Now it's a rising wedge kind of formation, so a push to the downside, followed by the rising wedge formation, and then continuation lower. So we still have room towards the upside. Let's move to daily. So as per daily, this is the first level, which is around 1.3057 to 3082. If it breaks this high, then we can expect it to continue higher towards the next zone, which is around 1.3200 to 1.3250. So the first upside level could be 1.3080, followed by 1.3200 to 1.3250. So we have to pay attention around this trend line. If we get a bearish bounce, then it may bounce lower towards this area, again push higher. It will keep on ranging between this rising wedge and finally push to the downside. Let's move to 4 hourly. On the 4 hourly, we can see some slowdown. I'm again saying slowdown, not a reversal, because we have a bearish divergence on the MACD histogram, but MACD lines are still printing higher highs. Okay, so I'm expecting a push to the downside, and until it breaks below this area, which is around 1.2750 to 1.2800, I'm expecting a push to the downside. Oops. Yeah, and then continuation higher within the rising wedge pattern boundaries. So any any drop is an opportunity to buy in the short term, but for the longer term, once it reaches towards the end of the rising wedge, we can expect continuation to the downside. Now the next one is, which I'm going to take, is EURGBP. Starting from the monthly, based on monthly, a series of higher highs with a bearish divergence. So a downward movement was expected and it moved to the downside, marking the fib from this low to the recent most high. It retraced exactly to the 50% area, and then moving to weekly, and on the weekly we got bullish divergence, a series of lower lows followed by higher low on MACD lines and MACD histogram as well, followed by the breakout structure. This was the structure which was required to be broken, and it was broken to the upside. Now, as per the rule, fib retracement from the recent most low to the recent high, and correction to the 50% or 61.8 was expected. It dipped slightly lower than 61.8, in between 61.8 and 78.6, and again started rising. So I'm expecting, based on the fib extension, the first target to be 0.8656, followed by 0.8852, which is the next extension level, fib extension 100%. And let me clear this fib retracement tool because I need to mark from the highest to the lowest, and the magnet zone means the duplication of fib extension 100% with the fib retracement 50% of the previous downward cycle is exactly at the same level, which is 0.8857. So there is a good probability that it will continue higher towards 0.8857. So the plan as per the weekly remains to buy on the dips. During the last week, it made a bearish divergence on the lower time frame, I was expecting a continuation to the downside, but it failed based on this divergence. But now it seems it is picking up momentum to the upside because the MACD histogram, they are rising to the upside. Even the MACD lines are rising higher, and as per the cycle count, as per the divergence and the fib retracement on the higher time frame levels, everything seems bullish. Just a blockage in between is the falling trend line, which seems to be broken. Yeah, let's see on 4 hour. Even on the 4 hour, everything remains bullish because the MACD lines, they are still pointing higher. Even the histogram, based on the continuing pattern, they are going higher. Turning to 1 hour. On the 1 hour, we have a slowdown scenario based on the divergence, bearish divergence on MACD histogram, but the MACD lines, they are printing higher highs. So a pullback into this area. Let's use a line tool here. Yeah, a pullback into this area should be taken as an opportunity to buy. Okay, and the last one I'm going to cover is gold. XAUUSD. Let me clear the drawing. Yes. So on the monthly, based on this higher high formation and a lower high formation on MACD lines, it was expected to come down, and it started its downward journey, turning it into a line chart. Let's mark the important level. Going to weekly now. On the weekly, we still have lower high formation, highest point, lower high, and it has printed another lower high recently. Even the MACD histogram, they are still in the bearish territory, and the MACD lines, they are still going downwards, but we have some slowdown based on the histogram, but not on the basis of the MACD lines. Turning to daily now, and the daily seems to be bearish again because it has formed hidden bearish divergence, and hidden bearish divergence is a bearish continuation pattern. And now we have got a bearish cross on MACD lines, as well as we have got a red histogram, which means it has turned bearish again. Turning into line chart. So higher lows on the weekly, higher lows on the daily, bearish continuing divergence, hidden bearish. Let's see what's on the 4 hourly. On the 4 hourly, we still have this higher low point around 1712. Until this point is not broken, until this level is not broken, we still have a probability of it bouncing higher. Officially, it should break below 1712. It should close below 1712. then it will be 100% confirmation of the downward continuation. Okay, otherwise, as per MACD histogram, the condition is still bearish. As per MACD lines, the condition is still bearish. And based on 1 hourly, we have a slowdown in the bearish momentum because we have bullish divergence based on histogram even here. And the MACD lines, they have not yet completed the bullish cross here, but once it completes the bullish cross, the bullish divergence will be completed. So what's the plan? The plan remains to sell on the rise. I'm ignoring the I'm ignoring the fact that it could be turning bullish as per the 4 hourly chart, because the higher time frames, the weekly and the daily, they still remain bearish, clearly bearish. And one more thing, if I use a Bollinger Band on the chart, and on the weekly, it never closed above the midline of the Bollinger Band, never closed above the midline, which is still a bearish sign. On the daily, it has crossed below the midline of Bollinger Band. On the monthly, it bounced lower exactly from the midline of Bollinger Band. So everything is hinting towards downside on the basis of higher time frames. So that's the reason I'm ignoring the fact of the 4 hourly pattern, that it has still not yet broken below 1712, and going with the higher time frames, I feel that gold remains bearish. In my previous videos, I've mentioned that on the higher time frame basis, I'm expecting gold to go down, but just on the mid time frame basis, means on the 4 hourly and 1 hourly, I was expecting it to reach to the key level of 1830, and then continuation to the downside. But because the dollar has started gaining again, and which means the gold remains bearish, even on the chart patterns, technically it remains bearish. So my plan would be, on the basis of 1 hour, if we are expecting a bullish, if we are witnessing a bullish divergence, I'm expecting short-term bounce to the upside in between, but I'll be looking to sell on the rise rather than to buy on the dips. Alright guys, so I've covered the major instruments for the upcoming week. If you have any doubts, you can get back to me, you can comment on this video, and I would like to request you to show your support, subscribe to my YouTube channel, and give a thumbs up to my videos. It keeps me motivated. Thank you and have a good luck.